Welcome to Orange Energy. In this presentation, we've pulled together data from some of Australia's top energy projects spanning coal, uranium, natural gas, hydrogen, and solar. Whether these projects are owned internationally or by Australian companies, they all have key players in our energy landscape. This isn't just about energy we produce, it's about thinking big, thinking bold. This is orange sky thinking. We envision a future where Australia could lead the world in Bitcoin mining. Our hope? Well, that someone in the Australian government sees potential, gets curious, and takes the next step, booking a meeting with one of the top Bitcoin educators in the country to walk them through Bitcoin mining and how green it really is. Let's dive in. So, energy and Bitcoin. Energy is the lifeblood of Bitcoin mining. Imagine Bitcoin miners as digital gold diggers, but instead of pickaxes, they require energy to uncover those precious Bitcoin. The more affordable the energy, the more profitable the operation. But there's a twist. Bitcoin mining is like an energy investigator. It hunts down the cheapest energy available, making the most out of waste, untapped, and renewable energy sources that would otherwise be, well, just sitting there. Think of it as giving a second life to energy that may have been wasted. Australia, with our abundance of natural resources and renewable energy, has a golden opportunity here. We're already global leaders in so many energy sectors, so why not leverage that and become a powerhouse in the Bitcoin mining world? The potential is right in front of us, and Australia could lead the charge. How does Bitcoin generate revenue for miners? It all starts with energy. Bitcoin miners use energy to verify transactions in each block. We call this proof of work, and these blocks come every 10 minutes. Think of it as a digital race. And the prize, or currently a whopping 3.125 Bitcoin, plus all the transaction fees in that block. But there's a catch. It's not as easy as it sounds. Winning a block is like guessing a winning number in a lottery. The more powerful your computer, the more guesses you can make per second, and the better your chances of winning. Now, here's something fascinating. Every 4 years, the Bitcoin rewards cut in half during an event called the Bitcoin halving. By the end of 2140, all the Bitcoin rewards would have been mined, leaving only transaction fees as the incentive. As the price of Bitcoin goes up, so does the miners' profits. But how do they manage their rewards? Well, it's a bit of a balancing act. Take Foundry USA as an example. They might sell their Bitcoin reward at market value to cover energy costs and maintenance. If they think the price will rise, they might hold onto a portion and even the entire reward, waiting for the perfect moment to sell. When miners hold their Bitcoin, it decreases the supply on exchanges, creating a shock, and that drives the price higher. It's all about timing and strategy, and when the price is right, they cash in. That's the intricate dance of Bitcoin mining and revenue. Energy in, Bitcoin out, and timing is everything. They will sell the Bitcoin to a Bitcoin exchange or sometimes peers, and then the exchanges and peers will then offload their Bitcoin into the open market as well, distributing Bitcoin across the world. Now let's take a look at Australia's energy resume. It's pretty impressive. First up, Australia is a global top 5 for natural gas production. We're not just playing in the energy game, we're one of the major players. Next, we're the global top 2 for coal. That's right, Australia is one of the world's leading coal producers, and our coal reserves are vast, but we're not stopping there. We're also the global top 2 for uranium. With the world looking for cleaner energy options, our uranium resources are a significant asset. And let's not forget about hydrogen. Australia ranks in the top 3 for hydrogen production, a fuel that has been hailed as the energy of the future. With such a powerful energy portfolio, Australia has the potential to harness the resources not just for traditional energy uses, but for innovative opportunities like Bitcoin mining. It's time to think big and think about how we can leverage this energy advantage on the global scale. For coal, we can generate 2,500 kilowatt an hour per every 1 ton. Natural gas, 7,500 kilowatt an hour per ton. Hydrogen, 16,500 kilowatt per ton. And uranium, a whopping 24 million kilowatt an hour per ton. So let's look at Australian natural gas first. We have Barrow Island, owned by Chevron, is one of the largest gas plants in the Southern Hemisphere with a capacity of 15.6 million metric tons per annum. Then we have INPEX, a Japanese-owned project, has an impressive 9.3 million metric tons. Northwest Shelf, which is a joint venture with Chevron, Shell, and of course Woodside Energy, one of Australia's largest listed energy companies, has a capacity to produce 16.9 million metric tons per annum. The total energy production per year by these top 5 projects equates to 332 billion kilowatt an hour. Let's assume we just take 1% to contribute to Bitcoin mining. Now we look at coal. Here are 5 top coal projects with 4 major proposals out in the market for approval. We're just going to look at the active projects, but this would suggest that approximately double the amount of coal is available once all these projects are up and running. These 5 active projects can produce up to 1.3 trillion kilowatt an hour per year at full capacity. Let's assume 1% is contributed to Bitcoin mining. Australian uranium is by far the most efficient and green energy source we can generate. Here are Australia's top 5 projects that generate 281 billion kilowatt an hour per year. Let's assume we take 1% to a Bitcoin allocation. And of course, Australian hydrogen. Hydrogen is the future. We have 4 projects here that are totaling about 345 million kilowatt an hour. But hold your breath. Central Queensland Hydro Hub, Cape Hardy Advance, Hydrogen Western Junction Pro. These are all projects that are proposed that would generate up to 8 billion kilowatt an hour per year. Let's take just 1% of the allocation from the active projects. We'll leave the proposed projects out of this. Here are 5 of the top Australian solar farms producing about 2.3 billion kilowatt an hour. Again, let's just take 1% of this energy. Fun fact, the Australian sun. How much land is required to fuel Australia's daytime solar energy needs? The land area would be the size of that orange dot. So here's a list of the 1% of the Australian energy with the liquid natural gas, coal, uranium, solar, hydrogen. This equates to 11.374 billion kilowatt an hour. As a margin of error for efficiencies, let's wipe out 20%. That leaves us with 9.099 billion kilowatt an hour. Now we need to power the Bitcoin rigs. In this example, the Bitmain Antminer S21 XP Hydro, one of the most popular Bitcoin mining rigs currently. 9.099 billion kilowatt per year could power 183,763 machines per day. How do we calculate that? Here's the calculations. 9.099 would produce 24.9 million kilowatt an hour per day. Each machine is 5.67 kilowatt. Annual machine consumption, 46,669.2. So we go with 9 billion divided by 49,000 leaves us with 183 machines. Each machine can generate 473 terahash a second. So we're looking at about 86.82 exahash per second. The hash rate. At the time of writing, Bitcoin's network hash rate is 593.64. This means that if a miner could produce a hash rate of 593.64 exahash a second, they would theoretically have a high probability of solving nearly every block. However, this scenario is highly unlikely because the network consists of many miners, each contributing their own hash rate, which distributes the chance of winning across the network. In simple terms, the higher your hash rate relative to the total network hash rate, the higher your chances of earning rewards through mining. Here we see the major Bitcoin mining pools contributing to the total hash rate. There are 2 main ways to mine Bitcoin. Number 1, solo mining. This involves mining on your own. The benefits? If you win a block, all the rewards are yours. The drawbacks? A solo miner typically contributes a small fraction of the total hash power, making the odds of winning a block comparable to winning the Powerball lottery. Number 2, Bitcoin pools. This involves combining your computer hash rate with thousands of others to work as a team. Benefits? Higher chance of winning Bitcoin. Drawbacks? Rewards must be shared among the entire pool, resulting in smaller individual payouts. Additionally, pools often charge an administration fee to participate. Currently, China's Ant Pool, VIA BTC, and F2 Pool dominate, contributing over 35% of the total hash rate. This means roughly 35% of newly mined Bitcoin is headed to China. This presents a strong case for Australia to ramp up its efforts in Bitcoin mining. Australia could be a huge player with just 1% of the energy capacity of our top 5 largest projects in each commodity group. It increases the hash rate to protect the network. It would generate 12.76% of the total hash rate daily, or equivalent to mining approximately 20,958 Bitcoin per annum. Australia would become the top 5 Bitcoin holder by 2029, in line with energy dominance. This encourages countries to utilize excess and waste energy. First to market advantage. Now look closely. See that pink dot in the middle. That is the area required for 6,500,000 watt solar panels. This could be in the bush and powering 528,835 Bitcoin machines per day for approximately 5 hours to generate 249.96 exahash a second. With this farm, Australia would be generating 65,000 Bitcoin per annum, or approximately 40% of the total hash rate. We have spent far, far worse on other projects. We could have built 115 of these 6,500,000 watt solar farms for the same cost as these submarines. That is 690 million solar panels, or 629.625 terawatts per hour. That's 58.75 million houses a year, 2 times of the UK yearly usage, or New York City 10 times over. Australia must think smarter. 629.625 terawatt an hour would generate approximately 12.82 million Bitcoin mining machines, which would total 5,474 exahash a second. That would equate to 88% of the total Bitcoin hash rate. But what's next? How can the Australian government work with these giant energy companies to find a solution? Can Bitcoin be used as a carbon credit for some of these companies as an offset? This encourages mining within these plants. Can Australia become a top 5 Bitcoin holder before it's too late? The future could be bright for our children. Are our politicians thinking ahead? Thank you.